While the S&P continues to march up to the 1272 extension, there's one sector which isn't participating. If we load in the utility labels indicator and we take a look at the utility labels, but on the sectors, the sector that's not participating is the energy sector. In today's video, we're going to dive deeper into XLE and take a look to see if there's any good short side setups here. Now, if I load in XLE first and I start the conversation with Fibonacci, if I project from our high of 98.97, some of the past swings that we've had, so essentially comparing previous moves, we get all of these different levels here. XLE since 2024 has hit most of these levels. Most recently with the drop in 2025, we came down to 75, but we have yet to tag the 71 level. Now, most recently with today's, or rather Friday's candle, we've pulled back to the market pulse, and the market pulse is currently red. That tells us that XLE, the energy sector, is currently in this stage of deceleration. The market is telling us that we should expect more downside. The bears are currently in control. Now, you might be thrown off with some of this recent bullish market pulse, and if we take a look at that in a little bit more detail, for a brief moment, the market was in a stage, the energy sector was in a stage of acceleration where bulls were in control. But take a look at what's happened with the highs. We started to form higher highs, and that stopped forming. Now, you could argue that this is a bear flag. In either case, I'd be looking for a lower low. Now, for a lottery type trade in this, if you were to load in the weekly time frame chart and I load in our normal indicator set, here's what I'm reading. If we take a look at the weekly time frame, I see a momentum switch, I see the edge signal, and with this current week, I see a bullish squeeze signal. However, that's with a bearish market pulse. That's not really one I'm too interested in. That also tells us that we have a weekly squeeze forming. So if we load in the triple squeeze here, we can see that the squeeze has been building momentum, but all this time that the squeeze has been building momentum, price has been flatlining. To me, that's a sign of more bearishness. So yet another reason why I'm looking for this squeeze to fire short instead of long and ignoring this bullish arrow. Now, if we come into the daily time frame, here's what I see. The daily time frame on Thursday's bar had a bullish momentum cross, but with a bearish candle, a red candle. That to me is not the signs of a bull or a bullish market, bulls being in control, anything of that regard. Rather, more a sign of maybe a false signal. Now you look at Friday's candle, and Friday's candle feels like a rejection right near the volume weighted moving average, and this is our market pulse line. So near that 86 mark, it feels like there's a good deal of resistance. And if you were able to, on Monday, if see this resistance hold somewhere maybe near 86.50, 86, somewhere here feels like a good place to try and get short XLE. In terms of where I'm looking for this bearish move to take us, now there's two different trade ideas. One is the safer, I think, more realistic bet, which feels like at least a retest of the 84 level, if not a breakdown to about 82. But to me, that lottery sort of trade idea, if you will, is if we were to come down to our last remaining Fibonacci level near 71, essentially breaking below these lows. Now, if that were to happen, so let's use 71 as the price mark, that means we need a price move of about $14. $14 would take us to about 305 days out for expiration for that $14 to be built into the expected move. That to me is way too long, and I thought these options were a little too expensive as well. So I tried to narrow this down a little bit more. Instead of 70, I take a look at 75. So what if we retest these lows? 75 would be a $10 expected move, which allows us to bring our expiration in closer to either December or Jan monthlies based on how much time you like to give this trade. Now here I have the Jan loaded on. So the Jan 75 put is currently going for somewhere between $1.67 to $1.90. This feels like a good trade looking for a move down in XLE, especially with the amount of 1, 2, 3, 4, 5, 6, 7 overbought confirmation signals. We now see the trend also changing, and we see what I think is a false momentum signal to the upside, which we saw confirmed with Friday's lack of bullish activity. So I'm looking for more downside here. If you were looking for a home run sort of trade, I think this is a fairly interesting idea. Outside of that, you could also look at slightly shorter dated puts, maybe something like 84, but instead of looking for 124 days to expiration, with 84, you're looking for about a dollar move, which allows you to come into the September monthlies. Hope you found this video helpful. For those of you looking for some sector trade ideas, I think XLE is a great opportunity. Take care, and I'll see you in the next update.